Okay, fine. So now we are talking about merger. Now understand one thing, when I talk about merger, merger is like admission. Okay? What do
Yeah.
you mean by merger?
Merger is basically when one business merges with another business to make a third business. Like two businesses come together.
Okay, so merger is basically one business. Business one is merging up with another business to make a third business. And in this merger, the first category of merger that we have learned is sole trader merging with a sole trader and forming a partnership. Are you with
Huh.
me?
Yeah.
Okay. Now, the second category of merger is where a sole trader is merging up with a partnership. Okay, and it is it's forming another business. So it is merging up with a sole trader. Sole trader is merging up with a partnership. It is something like admission of partners.
Okay.
Okay, now understand what is admission. It is very important. See,
Okay.
I have partners A and B.
Huh.
This is a partnership form. What is it? It is a
Partnership.
partnership form. So I have partners A and B who are already running a partnership firm named AB.
Hmm.
Understand?
Hmm.
Merging sole trader with partnership is exactly equal to admission sums.
Okay.
Okay, so I have partners A and B who are already running a partnership firm which is called AB.
Huh.
If there is another partner C, there is another person who is a sole trader. So
Hmm.
I have a sole trader C who wants to become a part of this partnership firm, and they decide to merge up and make the company called ABC.
Okay.
Okay, are you with me?
Yeah.
Okay, fine. So when they merge up to become A, B, and C, C might also have his assets and liabilities.
Yeah.
Okay, and A, B also have their assets and liabilities.
Huh.
There will be new value for the C's assets and liabilities which will be given to us. Yeah, and there will be new value of A, B's assets and liabilities which will be given to us when we merge up both of this is added. Are you with me?
Yeah.
When C's assets and liabilities are revalued, all the profits and losses on the revaluation goes to C alone. So I have no issues. Should I have any issues?
No.
But here the assets and liabilities belongs to A and B both.
Okay.
Yeah. So whenever I revalue the assets and liabilities, the profit on revaluation will go to whom? A and B both. Are you?
Okay.
So the profit on revaluation will go to A and B both. So when I am merging a partnership with sole trader, I have to follow certain steps only for partnership. Are you with me?
Huh.
Let's see. Let's take it again. Who are my old partners?
A and B.
A and B. They decide to bring in another person, another sole trader, or another partner who is called what?
C.
A. So when they decide to bring in another person into the partnership, this is a sum of admission.
Yeah.
I could say this is a sum of merger of sole trader with partnership.
Huh.
Okay. Now A and B were already running a successful business. They were or they were not.
They were.
They were already running a successful business. Now when they decide that they will bring in a new partner C, That means what? They are
They
changing the structure
yeah,
of the
they're
business.
changing the structure, huh?
So whenever you change the structure of the business, there is one thing that definitely has to be done. There has to be done goodwill adjustments. And your
Okay.
assets and liabilities has to be revalued. Whenever you change the structure of the business, two things that is definitely done, goodwill adjustment and
And assets and
revaluation.
liability revalue.
Okay, assets and liabilities, whenever they are revalued in an account which is called which account? Revaluation account.
Account.
Revaluation account is made with the sole purpose of
Revaluing the assets and liability.
revaluing the assets and liabilities. Okay, come on,
Yeah.
taking this again for you. I have two partners A and B. What do they decide?
They decide that they want to like add a new partner into the business, which is C.
C. So the new partnership form.
What are you saying?
New partnership form will become A, B, C.
Yeah.
Okay. So this business is changing the structure.
Huh.
So if it's changing the structure means what?
Business changing the structure means that they're adding another like they're adding
Business changing structure means when you change your profit sharing ratio,
oh, goodwill adjustment and assets and liability need to be revalued.
you admit a new partner, you remove a partner or a partner retires, or there is a death of a partner, or when you do admission or there is a retirement, one partner goes away, or there is a death of a partner, that means you are changing the structure of the business. What are you doing?
Changing the structure of the business.
So whenever you change the structure of the business means what? What will you do?
Make a revaluation account.
So whenever you are changing the structure of the business, two things will definitely happen. What are the two things that will definitely happen?
Goodwill adjustment and asset and liability revaluation.
The first thing that will happen is revaluation of assets and liabilities. And the
Huh?
second thing that will happen is goodwill adjustment.
Yeah.
I'm giving you 2 minutes time to note down whatever you want to, and you feel that you should note down, and I will move ahead. So now let's take it again. What are we studying?
Admission of a new partner.
Admission of a new partner. Admission of a new partner is similar to what?
Similar to matlab
It is similar to merger.
okay.
Admission, that means A and B are my old partners. I admit a new partner, that is C, into the business.
Yeah.
This is a sum of admission. The steps will remain the same. Or I could say there is a merger. Merger of what? A sole trader with a partnership. Or let's change the format in the same in this way. There is a merger of a partnership with a sole trader.
Hmm.
Okay, we are going to follow the same steps, whether it is a merger of a partnership with a sole trader or whether it is an admission of a new partner. Are you with me?
Yeah.
Okay, so who is A and B?
A and B are one partner. They're
One
like a partnership
partner, two
firm.
partners. They
Sorry,
are both
partnership
the
firm.
partners. The partnership firm and they are the partners. These partners decide what? They decide to bring in another partner.
Yeah, they decide to bring in a sole trader.
So when they decide to bring in another partner, it becomes what?
Admission.
Of partner. So when there is an admission of a partner, that means there is a change in the structure.
Huh.
There is a change in structure of what? The partnership.
Yeah.
Because there is a change in the structure, two things will happen.
Asset and liability revaluation
There will
and goodwill
be a
adjustment.
revaluation of assets and liabilities and what?
And goodwill adjustment.
There will be revaluation of assets and liabilities and there will be goodwill adjustments. Okay. So now there we have two partners A and B. A and B decide to bring in a new partner C. The old firm will dissolve and a new firm named ABC will come into picture. Okay, so when
Yeah.
this firm ABC is coming into picture, the two accounts that I will definitely make, first account is called the revaluation account.
Okay.
And the second account that I will make is called the partners capital account. Okay, I will have three columns, three partners, A, B, and C. Are you with me?
Yeah.
I am going to revalue what? I'm going to revalue my assets and liabilities.
Hmm.
That means the assets value can go up or the assets value can go down. Yeah,
Yeah, got it.
either the liabilities can go up or your liabilities can go down.
Uh,
So when I am making a revaluation account is like a nominal account. So all the good things will happen on which side?
all the good things will happen on the debit side.
Can you give me rule for nominal account?
Credit what comes in, debit what goes out.
This is real account rule. Can you give me rule for nominal account?
Nominal account is that debit all expenses and losses, credit all income and gains.
Nominal account is debit all expenses and losses, credit all incomes and gains.
I'm
Yes,
asking, I'm not sure.
yes, that is the rule for
Yeah,
nominal account.
I
Nominal
got
account rule is debit all expenses and losses, credit all incomes and gains. So revaluation account is like which account?
the nominal account.
In the nominal account, all the good things will happen on which side?
Credit,
And all the bad things will happen on which side?
debit.
That means if you have an expense or loss, now you're not going to record expenses, right? So here you
Yeah,
will record all the loss and here you will record all the gains. So this is the format of remembering revaluation account. All the good things will happen on the credit side, all the bad things will happen on the debit side. We treat
okay.
asset as your wealth. Come on. If asset value is going up, it is good or bad?
Good.
Good. If assets value is going down,
It's bad.
if liability is going up
Liability going up is bad.
and liability going down,
Good.
liability going down is good. So assets is going up or liabilities is going down. Remember the difference, okay? How much
Yeah,
up,
yeah, yeah.
how much down. That is recorded on the credit side and assets going down or liabilities going up is recorded on the debit side. Okay? If the good thing is more, if the good thing is more and the bad thing is less, good is more. Okay?
Hmm.
Good is more and the bad thing is less. The difference over here that you get is called what?
Got it.
This is called what? This is called the profit on
Profit on
revaluation
revaluation. So profit on revaluation is on the debit side.
of the revaluation.
Okay.
Okay, this profit or loss on revaluation belongs to whom?
On to the partners, the current partners.
Old or new?
Old.
Old partners, because the assets and liabilities are revalued for the old partners. So this profit or loss on revaluation belongs to the old partners and it will be distributed amongst the old partners in what ratio?
The profit sharing ratio, no?
Which one?
Whatever is given over there.
The old profit sharing ratio.
The whole profit sharing ratio.
It will be distributed amongst the old partners in the old profit sharing ratio. There were some basics that I forgot to drill in you. Okay. I have my partners A and B. They
Okay.
decide to bring in a new person C into the partnership firm. Okay. And they decide to make a partnership firm which is A, B, and C. So A,
Yeah.
B is called the old partner. C is called the new partner. Are you with me?
Yeah.
The profits that A and B were sharing previously is called the old profit sharing ratio.
Got it.
Okay. And the profits that A, B, and C are going to share in the future. Okay. That will be called the new profit sharing ratio.
Hmm.
What will be called? New profit sharing
New
ratio.
sharing ratio.
So the assets and liabilities were revalued for whom? For AB.
Yeah.
It was happening in the revaluation account.
Hmm.
All the good things happened here, all the bad things happen here. Assuming that I have a profit on revaluation, the profit on revaluation will be transferred to
The profit on revaluation will be transferred to the
where? Profit on revaluation will be transferred where? Ashita, are you there?
yeah. Profit on revaluation will be transferred from the revaluation account to the the admission
Can I
account.
see? Can you see my screen?
Yeah.
From where to where?
From revaluation to
Which account is this?
what is PCA account?
Partners capital account.
Oh, okay. Partners capital account.
So the profit on revaluation will be transferred from where to where?
From revaluation account to partners capital account.
And it will be distributed
The old two partners.
amongst the old partners.
Yeah.
In which ratio?
Old profit sharing ratio.
So the profit on revaluation will be transferred from revaluation account to the partners capital account. Yeah. And it will
Yeah.
be distributed amongst the old partners in old ratio.
Huh.
If it was something otherwise, loss on revaluation,
Then it'll be on the debit side of the partner's capital account, no?
will be transferred to the partner's capital account on the debit side. Okay.
Huh.
Are you with me?
Yeah.
I'm taking you to the very most important thing. Profit on revaluation happens when?
Profit on revaluation happens when
The good is there happening. Yeah.
hmm.
Profit on revaluation happens when there is something good that is happening.
Huh, okay.
And loss on revaluation happens when there is something bad happening.
Got it.
Are you with me?
Yeah.
Okay. Sometimes in the question, they do not ask you to make revaluation account. They tell you there is a merger of a partnership with the sole trader and prepare the partner's capital account. Now, I know if there is a merger of a partnership with a sole trader, the assets and liabilities have to be revalued.
Huh.
Now, if I make a revaluation account, I can do all of this and transfer the profit on revaluation, here debit, here credit. You can see my screen.
Yeah.
I can do it from year to year, or I can do it from year to year.
Huh.
But now I don't have to make a revaluation account, but I have to incorporate everything directly in the partner's capital account. Are you with me?
Hmm.
Now, if I have to incorporate everything directly in the partner's capital account, tell me when a good thing happens. Profit or loss?
Good things happen. I don't. 1 minute. I don't understand what question only you're asking.
There is a good thing happening over here. I have to incorporate the profit or loss on revaluation in the partner's capital account without making the revaluation.
Okay.
So if a good thing is happening, will be a profit on revaluation or a loss on revaluation?
Good thing will happen to profit.
It is a profit on revaluation, and profit on revaluation will come where?
On the credit side of the partner's capital account.
If the assets value is going up, it will appear in the credit side of partner's capital account. Okay, this is I am incorporating profit or loss on revaluation without making a revaluation.
Yeah.
If the assets value is going down, is it a profit on revaluation or a loss on revaluation?
Loss.
Where will it appear?
A debit side.
Partners capital account debit side. Come on. Profit on revaluation or loss on revaluation? Profit on revaluation or loss on revaluation?
Profit.
Are you seeing my screen by any chance?
You're presenting, yeah, na. Liability going up is bad.
It's a bad thing. It gives you profit on realization.
Loss, sorry.
Where will it go?
Loss on revaluation will go on the this debit side of the partner's capital account.
Profit or loss on revaluation?
I can't hear you.
Profit on revaluation or loss on revaluation for this?
The profit.
Where will it go?
This will go credit side.
Partners capital account credit side.
Yeah.
So if they ask you to make a revaluation account, you will make and transfer the full profit or loss on revaluation to the partner's capital account.
Okay.
If they don't ask you to make,
then ऐसे करके I have to do.
there will be only one or two adjustments. You have to see if it's a profit on revaluation or a loss on revaluation and transfer accordingly.
Okay.
So this is the steps that we were talking about over here. There is a merger of a sole trader with a partnership firm, or you could say admission. First thing, what will you do?
Revalue assets and liabilities of partners and transfer revaluation gain or loss to the partners.
So you will revalue the assets and liabilities of the partners and transfer the revaluation gain or loss. So if its assets is going up, it is a good thing. Yeah.
Yeah.
So it will go to partners capital account credit side. Confirm, then I will move ahead.
Yeah, I understood this.
So can you tell me assets going down is what?
Assets going down is a this.
Good or
Bad
bad?
thing. Bad thing.
So
Go on the credit side.
understand why will it go on the credit side?
In the partner's capital account, obviously, no, partner's capital account will go on the debit side because bad is debit.
Profit on revaluation will come over here.
Yeah, loss will come there.
Loss on revaluation will come over here.
Hmm.
So now, assets going down, bad thing.
Yeah.
Are you with me?
Huh.
Come on, the next one.
Liabilities going up is also a bad thing. So, debit side, loss side.
Okay.
And liabilities going down is good thing. So, credit side.
Okay. So when I do admission, first thing that I am going to do is what? I am going to revalue the assets and liabilities. There is two way I make a revaluation account and do it, or I directly do it. I will revalue the assets and liabilities and I will transfer the profit or loss on revaluation to which partners?
To the old partners.
In which ratio?
Old profit sharing ratio.
Old ratio. Now, second thing that has to happen when there is a merger or change in the structure, what is it?
Goodwill adjustment.
Goodwill adjustments. What are the adjustments related to goodwill?
Raising goodwill and writing off goodwill.
So there are two adjustments that is related to goodwill. The first adjustment that is related to goodwill is you have to raise the goodwill.
Oh.
And the second adjustment that is related to goodwill is that you have to write off the goodwill. So raising goodwill happens where?
Raising goodwill happens when
Just try to recall, I'll come in a bit. 1 minute. The change in structure, I revalued my assets and liabilities. Profit on revaluation is distributed amongst the old partners in which ratio? Amongst the old partners in which ratio?
old profit sharing ratio.
Old ratio. And the loss on revaluation is distributed amongst the old partners old ratio. So
Huh.
revaluation is done. Now the second thing, you do goodwill adjustments. When I say goodwill adjustments, that means you have to raise the goodwill and write off the goodwill. When I am raising the goodwill, goodwill is always raised in OPPO. What do you mean by this OPPO? That means goodwill is always raised among the old partners in old ratio. Okay?
Yeah.
Goodwill raised means I am creating an asset. What is the meaning of goodwill raised? I am creating an asset and I am giving the benefit to the old partners.
Hmm.
Okay, so goodwill is raised amongst the old partners in which ratio?
Old profit sharing ratio.
Okay, so here I will raise the goodwill. Goodwill is raised amongst the old partners in old profit sharing ratio.
Hmm.
That means they've created goodwill and they have brought this goodwill into the new firm that is ABC. Okay?
Yeah.
Okay. So goodwill is raised and it is created. So it is raised amongst the old partners in old ratio. Now this goodwill is brought into the new firm. Now this goodwill is brought into the new firm. So this goodwill will be written off. Okay?
Yeah.
Hmm?
Yeah.
Goodwill
Yeah.
will be written off and it will be written off amongst the all the partners in new ratio because now this goodwill belongs to the new firm. So
Hmm.
raised is always in the old ratio, written off is always in the new ratio. Raise will happen in the partner's capital account credit side, written off will happen on the partner's capital account debit side. Okay,
Hmm.
so goodwill raised, goodwill written off. Where is goodwill raised?
Partners account. Goodwill raised is partners account credit side and goodwill written off partners account debit side.
Okay, goodwill raised. After you raise and write off the goodwill, Raise is before admission, write off the goodwill is after the admission. After you raise and write off the goodwill, you have to do two things. You will bring the capital. Okay, what will you bring? You will
The
bring
capital.
the capital. Who's the capital? The new partner. So on the credit side of partner's capital account, the first thing that you will have the balance begin down of the old partners, and the new
Yeah.
partner will bring in his capital. Okay, new partner will bring in his capital, and then you will close the partner's capital account and you will get the new partner's capital balances. Okay, the balance closed down. Always remember that this balance closed down is equivalent to your NATO. When I say it is equivalent to your NATO, that means it is equivalent to your net assets taken over. Are you with me?
Yep.
So this is all that is related to admission of partners. With this, what we will do is, there is this first sum over here, which is related to admission. I will give you some time. Okay. Look at this sums. Sometime I'm giving you. Look at these sums. What are you required to prepare? You are required to prepare a revaluation account, partner's capital account, and a statement of financial position immediately after admission. What I don't want from you is do not prepare revaluation account. Directly give me the partner's capital account and the statement of financial position immediately after admission.
Okay.
What you will do is think yourself. Try to apply the steps yourself. Keep the steps in front of you. Prepare the partner's capital account and SOFP, and then we will discuss with each other.
Okay.
Works with you?
Yeah. Capital is the credit side.
Partner's capital account, which balances do they have?
They have the opening balances will come on the credit side.
Partner's capital account always have a credit balance. So the capital account balance, where will I write?
On the credit side.
I will write the capital account balances of Fatima, Rakhi, and I need 3 partners, right?
Yeah.
So, sir. So I have 3 partners, Fatima, Rakhi, Saif. Fatima, Rakhi, Saif. Now, if I see over here, we have capital and current account both. So that means we are following which capital method? I have a capital account and I have a current account. I have both the accounts. I also have the capital account. I also have the current account. That means we are following which method?
Which method? Capital account, no?
Fixed capital method or fluctuating capital method?
That now, how do I know?
All adjustments can be done in current account. If I have capital account and current account both, that means I'm following fixed capital method. If I'm following fixed capital method and it is a sum of admission, only capital balance, additional capital, goodwill adjustments, and revaluation adjustments happens in the capital account. Are you with me?
Yeah.
Okay. So first thing you will write the partner's capital account balances over here. Yes?
Yeah, got it.
Then what?
Then I have to figure out good or bad na karke with assets and all.
Read the question, no, please. Please read the question.
On April 1st, 2020, they agreed to admit Saif, a sole trader, as a partner. As we agreed, it was agreed that Saif would introduce the following assets into the partnership.
Okay. So Saif is getting all these 3 things into the partnership.
Yeah.
If he is getting all these 3 things into the partnership means what?
The assets are going up.
Darling, a new partner is getting things into the partnership.
Yeah.
Means what?
Means that a new partner is bringing in capital. Yeah, he's bringing in capital.
So the capital of new partner is in cash and it is in.
Huh.
So the new partner is getting in motor vehicles, he's getting in inventory, and he's getting in cash.
Okay, so I have to write this all also.
So this is new partners capital 25, 17, and 8.
Huh.
Yes?
Yeah.
Okay, fine. Read ahead.
Then Fatima and Rakhi revalued their non-current assets upward to 180,000. They also valued goodwill at
Stop,
70,000.
stop. First adjustment. Come on, tell me.
They revalued non-current assets upward at 180,000.
Okay. So assets is valued upwards.
Good, that's good.
That means what?
That means it is going to be on the
Profit
um
from revaluation.
yeah, it's a profit from revaluation.
On revaluation.
On revaluation.
Where will
That'll
it
come on,
where will it come?
that will come on the this. What's that? Credit side.
It will come on the partner's capital account credit side.
Yeah.
And it will be distributed amongst
Both Rakhi and Fatima.
4, old partner, old ratio.
Yeah.
What is the profit sharing ratio?
The old profit sharing ratio is not given.
See my screen?
Oh, equally, a 50-50.
Okay, half.
So
So can you
99.
tell me what is the
Yeah.
profit on revaluation?
180,000. So it'll be 90-90.
Darling, they have revalued it upwards to 180,000.
Yeah.
So what was the non-current assets, old non-current assets?
One old non-current assets for 130.
130,000. It is
Yeah.
revalued upwards to.
180.
So what is the profit on revaluation?
50.
50,000. 50,000 will be distributed amongst
Oh, okay, like that you have to do 25-25.
25, 25. So non-current assets is revalued upwards. 25 and 25 will go to Fatima and Rakhi.
Huh.
Yes?
Yeah.
Come on, read the next part.
Next part is they also valued goodwill at $70,000. It was agreed that goodwill will be eliminated immediately after Saif's admission.
What does this mean?
It means that goodwill is valued at 70,000 and will be written off as soon as Saif is joined into the business.
So it is raised and written off.
Yeah, it'll be raised and written off.
Goodwill raised amongst
Fatima and Rakhi.
old partners. Old
Yeah.
ratio. Which side?
Which side? Goodwill raised is on the credit side and goodwill written off is on the debit side.
So I will write goodwill at 2 places.
Hmm.
Will and goodwill.
Yeah.
Okay. So here it is going to be raised amongst the old partners, old ratio.
Yeah.
Okay.
Hmm.
How much?
70,000.
So divide it now between partners.
So 70, 45, 45.
Oh my God, you don't have a calculator?
No, and my maths I said don't make me do maths and all. 35, 35.
Goodwill raise. Goodwill written off where?
Goodwill written off on the debit side, 35, 35.
Raised is amongst.
Yeah, raised is 35. I told now.
And written off.
Written off will also be same now, miss.
I either bang my head or I'll make you bang your.
No, I'm not understanding now. What is going to be written off?
Goodwill is raised amongst. That is why I'm asking you to learn. You don't learn. Goodwill is raised amongst
Old partners ratio.
old partners, old ratio. Repeat it the same way.
Okay, goodwill is raised amongst old partners, old ratio.
Repeat.
Goodwill is raised amongst old partner, old ratio.
And goodwill is written off after amongst
New partners, new ratio.
all partners, new ratio.
All partners, new ratio.
So you will write it off amongst.
All three partners from 5:3:2.
So why you say 35, 35?
I am sorry.
So you raise the goodwill over here.
Yeah.
This is goodwill is raised amongst old partners, old ratio.
Huh.
Goodwill is written off amongst APNR. All
Yeah.
partners, new ratio.
Got it.
This was your profit on revaluation because only one asset was revalued upward, so we did not make the revaluation account.
Okay.
Then you close the balance, and this balance is taken down where?
This balance is taken to the SOFP.
Statement of financial position, and this should be equal to your NATO.
Okay.
Then you immediately have to make a statement of financial position after admission. How will you make it? Can you tell me?
Yeah, won't this be like similar? Only non-current assets will be the new one that we valued. Those ones will come.
130 was the value. You have revalued
Yeah.
it upwards.
Yeah,
And
130 plus 50 plus 25.
25 is what?
The inventory.
Inventory is a non-current asset.
Sorry, the motor vehicle and 17, my bad.
Motor vehicle. Then you will
Yeah.
write what?
Current assets.
Current assets is what?
78 plus 17 plus 8.
Yeah. Then you will get your total assets.
Yeah.
Then you will write Fatima Raki Saib, your capital account.
The balances that we got over here. Yeah, so 98, 104, 36. Then current account balance for both of these people. And then current liability is given over there as 31. So you'll do that. Then SAL tally.
So I want you to complete this sum and I am waiting for you. Okay?
Okay.
Okay.